goodness, what is going on out there? I thought we had pretty much finished the sell-off towards the end of last week. We had the FOMC event in the middle of the week on Wednesday. Interest rates remain unchanged and the market seemed to react okay to that. And then we had some not so great economic news events, particularly regarding unemployment, and participants seem to not appreciate that data so much. We started to experience more sell-off like we had in the week prior, and I thought come the end of the session on Friday, we had kind of digested that for the most part, and come today, Monday, we would be, if anything, maybe trading flat, maybe not necessarily up and rallying back towards all-time highs, but I certainly didn't think we would be dropping as much as we are. So let me bring you up to date. Today's date is August 5th, 2024. I am your host, Kyle, and indexes just got crunched again. S&P 500 was down at one point almost 3 whole percentage points. The Dow Jones fell over 1,000 points at one point today. It is just getting brutal. Nvidia is down over 6%, Apple over 4%, Microsoft over 3%, Amazon, Tesla over 4%, Google over 4%. Tech especially is getting slaughtered, of course, but it's not limited to just tech. We're seeing almost every sector is being hit pretty hard. I'm looking at the stock screener map. It's almost impossible to find just little individual squares of green hiding in there. There are some companies that hung on today, but for the most part, it is just a fire sale out there. Now, market participants have been reacting a little bit intensely to some of that economic data that we got towards the end of last week. The unemployment being the big one, it came in at 4.3%. It was expected to only be 4.1% was the forecasted. I think worst case scenario, maybe we were expecting 4.2%, a 0.1% increase, but we got that 0.2% increase. And because the prior 4 or 5 reports only had that 0.1% increase, what it suggests is that unemployment is not just increasing, but it's increasing on a growth curve. And so it might even be scaling a little bit more quickly than originally forecasted or expected. And that can be problematic. So if interest rates were not being lowered during this last FOMC event, then we have a whole nother month and a half of existing rates to still be at that higher for longer. And what will be the resulting damage of that? Now, the interest rates, it's not like we're going to drop interest rates and suddenly unemployment is just going to go the complete other direction. The market is somewhat kind of forward thinking the next 12 months of economic performance. It's not like we're going to see immediate changes in the stock market just based on federal interest rates determined today or at each individual meeting, right? Like the stock market is trying to forward calculate the value or the intrinsic value of whatever decisions are being made today. So, and you see that with stock earnings, right? If a company comes out with a really great earnings report and beats on both categories, earnings and revenue, but in their investors meeting 30 minutes, 45 minutes later, the stock might have been rallying really hard post that earnings release data, but then come the investor meeting and maybe the CFO or the CEO lead into suggestion that the next quarter may not be doing so well, then that could have a significantly different end result in aftermarket's price action compared to the original data release of the earnings itself. We might see the stock completely go up and over and then on to go negative 5, 10, 15% because the forward-looking expectation, the forward-looking performance now doesn't meet the justification for the price levels that it's at least not to shareholders. So why invest in a company that's about to be doing bad when I could take that money and put it elsewhere? Even if it just did great for this past quarter, really doesn't mean anything for me anymore if it's about to be doing much worse. But that they're expecting interest rates to be increasing by 0.5 percentage point. Now, originally, I was holding the opinion that come September, we may not even be getting an interest rate lowering event and that we may not even see that until November. A little contrary to the expectation of broader market participants, I know. But when it comes to lowering interest rates, I certainly didn't expect that we would be seeing a half of a percentage point lowering versus a quarter of a percentage point. Now, that is still all to be determined. It is not even guaranteed that interest rates do actually go down. And in between now and then, there is lots of economic data to come out that might even be contrary to some of the bad economic data that we've just had. So all this narrative can certainly still change in the near future. But from where it stands right now, the odds are getting increasingly higher that we are almost certain to be lowering interest rates come the September meeting. Certainly if things continue on this path. Just again, looking at the language from the Fed themselves, they have not been stating that they have been feeling significantly confident in that the data has convinced them that we are set on the path towards getting inflation back towards 2%. So until the Federal Reserve uses some of that language that suggests that they are confident, they are strongly confident in that inflation is headed back towards that 2% goal, that they can lower interest rates a little bit and still be on that path, then I have to stick to the original statements that they are holding those rates steady higher for longer. So we need to see the language change before we're going to see the interest rates change. And that also could all happen in the same meeting too. So this may not be something that we get, alluded to before the meeting takes place, unless perhaps there's some testimony or some interviews with Powell himself directly, or some Fed members through some meeting kind of leak some evidence that might be the case. As usual, I will stay diligently tuned into what the Fed is saying and hinting at, and reporting on that as I think there have been changes worth reporting on. Otherwise, in big news this weekend, Japan had a surprise interest hike that just sent massive disruption through the markets. If you think United States indexes are bad, oh boy, Japan indexes have absolutely fallen off a cliff. Their primary index is down over 12% in one day, which is a historical move, as in it has never fallen more than 12% in one day in their history ever. So that is a monumental historic event for them, and absolutely are we feeling that throughout the entire world and its economies. That is a ripple effect that cannot be ignored. They are obviously feeling the brunt of it and have faced significant market downturns because of that. And meanwhile, over here, we're dealing with our own problems and digesting our recent economic news and a little bit of turbulence on our end. And over there, they're going the opposite way. They're dealing with an environment where interest rates have been too low for too long, which is something that we're not unfamiliar with. And now they are having emergency rate hikes. And that is, you don't want to be having emergency rate anythings. We don't want to be having emergency rate hikes. We don't want to be having emergency rate lowering events, certainly not outside of the scope of their planned meetings. If we have a planned meeting in September for the next interest rate decision through our FOMC, and suddenly 2 weeks from now, on August 15th, the Fed comes out and says, oh, we're emergency dropping the interest rate 0.25%. The first notion might be, well, that's great. That's going to help boost the economy. But the other notion should be, something is broken. Something is seriously wrong if the Federal Reserve felt that they had to abandon their scheduled meetings and come out and loosen their monetary policy just at the snap of a fingers, then there's something either they're not telling us or that we have yet to find out about. So Japan is obviously going through their own hardships and working through that. And we're going to be feeling some of that simply because of our economic alliances and our trade and whatnot related to that. So I do think that played a part in why we opened so low this morning. And that may even be why our sell-off really only was sustained until early market hours, just prior to the New York open session. And once we opened our markets, it was a rally almost right back up. We rallied 3.14%, about 160 points on the S&P. which is a monster move in itself. Gosh, the volatility is just extremely high right now. Zooming out on the daily, we did finally dip past that 10% from all-time highs zone that I like to start considering buying in, and I took advantage of it. I am happy to pick up a few different companies at a discount. Maybe we will go even lower. I'm not going to let that scare me. If we go down to negative 15% or even negative 20%, then I'll be a buyer at those levels too. I'm not putting everything that I have in now that we're down 10%, but I am taking some of my funds on the side, some of my free cash, and putting it into the market, because how often do you get negative 10% swings this quickly to the downside? And if we get even further down swings, then I'll have more cash on hand that I can add to my accounts and add to my portfolio positions then, because those are just great opportunities to be able to either dollar cost average down or just get in at good values and good discounts on pretty popular stocks. There's a number of companies that have had splits in the last couple of years or even couple months that are now trading in sub 100s and looking pretty attractive at these price levels, considering their growth opportunities and what they've been doing over the last couple of years. So lots of opportunity out there. Don't be shy. Don't be afraid of these quick, harsh sell-offs. I still am adamant that fundamentally not a whole lot has changed. Yes, unemployment wasn't great. We will have to see what future unemployment numbers look like. Yes, federal interest rates are still unchanged, but the economy is still growing. Japan's issues aside and the effect that their markets have had on us for this morning, we are still doing relatively fine. And Japan's situation is unique to them. Everybody else is looking to lower interest rates, in Japan, because of their intervention by their government, is now finally only getting to the point of raising interest rates because of their own circumstances. So stay tuned for more news to come tomorrow. Hopefully not so much bad news to be reporting on tomorrow afternoon after the close. I hope you all had a wonderful weekend and were able to ignore some of this news at least until Monday morning, and then we can deal with it then. Certainly nothing to be done during the weekend. The future is anybody's guess. So again, thank you so much for watching. Please consider liking and subscribing if you've liked my content so far. Your support means everything to me and keeps me going. Please stay tuned, and I will give you another financial update tomorrow afternoon after markets close. See you then.